Welcome everybody to this week's stream here on Facebook Live. Every single week we go live talking about the VectorVest stock advisory and showing you guys tips and tricks on the mobile app and how you guys can utilize it to make yourself some money in the market. With that, just to give a little insight on anybody who's new here, what we do is we first start to take a look at what's going on in the market today. Then we talk about our general discussion here. So today we're going to be reviewing some of the watch lists that we've built here over the months or over the years here throughout our Facebook Live sessions. And then as always, we wrap it up for the fan favorite, where we'll analyze any stock that you want to take a look at and show you how you can do that in less than 10 seconds utilizing the stock advisory app. So if you guys have stocks that you want to see analyzed, make sure to stick around towards the very end and we'll analyze those stocks for you. So with that, now we have everything's coming in clear for you guys. Everything's looking good. Let's go ahead and jump right into it here today. So as we can see right now, the market is 3 ticks into the yellow and therefore the market is neutral, and VectorVest advocates caution when buying stocks at this time. Don't want to watch that, but that leads me to my next segue. If you guys are ever interested in finding out what's happening in the market today and what news and what headlines you need to be prepared for the upcoming week, as always, you can watch the daily market update every single night. It's about 5 to 10 minutes long and it'll recap what happened today, what news you need to be aware of for tomorrow, and how to prepare yourself for the next trading day as well. Highly educational and highly recommended watching this on a nightly basis. If we scroll down a little bit more, we get a look at the color guard here itself, and we can see where those 3 yellow lights that we saw earlier are coming from right now. So as we can see, the price is higher week over week, but down on a day over day basis. So therefore it's staying yellow. We look at the RT, which is looking at the short-term price trend of the overall market. It's cast on a scale of 0 to 2, and below 1 tells us the short-term trend is slightly down right now. But just like with the price of the VectorVest composite, it's higher than it was from a week ago, but lower on a day-over-day basis here. Then we look at the buy to sell ratio. The buy to sell ratio, once again, is higher than it was from the prior week, but lower than it was from the prior day. So therefore, it's going to remain yellow since it's not higher on a day-over-day and week-over-week basis. Then we look at the MTI, and really the same situation is occurring right now. We're lower on a day-over-day basis, but still higher on a week-over-week basis. So looking at the trend column, the primary wave is up, which is looking at the weekly trend of the market. And since we're higher on a week-over-week basis, the primary wave will be up. Second part is looking at the underlying trend of the market, or the MTI. And since the MTI is above 1, the underlying trend of the market is also up. After that, we then get the calls column, which stands for our confirmed calls. And our confirmed calls are our more conservative timing system here at VectorVest. They're our last signal we get to get into the market and our last signal we get to get out. Therefore, no matter who you are, you never want to ignore a confirmed call change. As we can see right now, we still remain in that confirmed up situation for you more conservative investors out there. Jose is tuned in from Morgantown, West Virginia. Glad to have a fellow West Virginian in the chat here with me, Jose. So glad to see you here this morning. Also, Kathy, I'm glad you enjoyed that video. It was something interesting, and I'm glad I got to present it. I wish I could be doing more videos this week. I've been sidetracked a little bit, but I hope to be getting some more of those YouTube videos out for you guys to be able to follow there. All right. So last but not least, on the homepage, we always like to take a look at the advanced declines on a daily basis. The advanced declines tells us the number of stocks moving higher today and the number of stocks moving lower today. So in an up day, you typically want to see a 2-to-1 bias. So you want to see twice as many stocks advancing than declining. Well, today the markets are kind of mixed, and right now we actually are sitting about 39% of stocks moving higher and about 50% of stocks moving lower. So no 2-to-1 bias in either direction, just kind of confirming that today's more of a mixed day. Today's more of just, one of those days you just be patient and, sit on your hands, let your stops do their jobs. May not be picking up any new positions, just simply, managing your current trades or your current holdings right now. So then if we scroll down, take a look at the major indices, we can see the Dow is essentially flat for the day, same as the NASDAQ. The S&P is actually up about 0.25%. VectorVest composite those down about 0.2%. So mixed bag, pretty flat so far. We had, some Fed comments yesterday coming in and don't really see a whole lot of excitement in either direction so far here today. So now we know what's going on in the market right now. Let's take a look at some of our historical watch lists that we've built here for our Facebook Live users. So we go ahead into the premium watch list over here on the left. And we'll just simply scroll down a little bit. Start and take a look at the marijuana stocks we did on the 21st of January. Now, I know what everybody is thinking. Marijuana stocks, clean energy, all of that has been hit really hard, ever since about February or so of this year, for the last couple of months now at this point. And when I was coming up with, today's topic or what we wanted to cover here today, I was thinking about it. A lot of these stocks have earnings coming up. A lot of these stocks have been grossly oversold. They've been beaten down. So to give you guys a little early warning or early preparation, it may be advantageous to start looking at areas that have been oversold. And marijuana stocks have been one of those. So as we can see, it is defaulted by our master indicator VST, standing for value, safety, and timing. Grow generation comes up as the number one. It is ready to sell right now. We're going to see a lot of these stocks that have been beaten up. But at the same time, when we break it down, we get the 4 indicators that VectorVest uses to make it easy to analyze any stock out there. So all of these 4 indicators that you see at the bottom below that graph are cast on a scale of 0 to 2. And to make it easy for the retail investor or the retail trader to be able to utilize this information, all you have to remember is above 1 is good and below 1 is bad. Simple as that. So looking at grow generation, for example, this stock has great long-term potential, or an RV above 1. This stock has pretty decent fundamentals, especially coming from more of a risky area in the market or industry in the market, since it's not fully legalized here in the States. It makes it troublesome to try to have a strong balance sheet in this type of industry. And Grow Generation has been able to do that with an RS reading of 1.12. As we all know, though, marijuana stocks have been getting beaten up pretty bad here over the last few months. So therefore, the timing or the RT is going to be below 1 at 0.64. And overall, the stock is favorable, but just not the right time to be getting into it. So this is a good time to potentially start prepping ourselves, getting a shopping list ready of some good opportunities that we could actually jump on board with, once we start to see some signs that these stocks are reversing or starting to head higher. So speaking of that, let's go take a look at the graph of this. So we tap on it here. Right now I'm on a 6-month graph. And one thing that really stands out is a lot of consolidation here on Grow Generation. If we zoom out to a 1 year, we can see it even clearer. We've had a phenomenal run over the last year with the lockdowns, retail investors at home trading on their own. Marijuana stocks got a nice run from that. And now we're seeing a little bit of a pause in that big rally that we saw last year. Does this make this stock a bad stock since it sold off from that high? No. As we just looked, we have good long-term potential. We have a solid balance sheet as well. Another way of considering that is that there's less risk associated with the stock because they have good fundamentals. So what we're looking for here is a breakout out of that consolidation. We can see we have lower highs ever since about the high of February, but at the same time, we're also starting to notice a pattern of higher lows, which is a very strong sign just in general. It's a consolidation pattern. I've talked about it before. A lot of people will know it as the wicked wedge, which I talk about quite often here on our Facebook live streams. And this is a very strong pattern because if it breaks the downside, then yeah, this stock, has more downside to go and something you can pass on. But keeping it on our radar now, that way if we see a breakout to the upside, if it breaks that pattern of lower highs, that would be an early indication that the stock's, cooled off enough, started to get some consolidation in and starting to find direction again and starting to take off. And that way you can capitalize on it at a early phase rather than waiting until it makes the main headlines again on the news and then you miss out on that explosiveness that you see when the breakout first occurs. So GrowGeneration, good stock, good fundamentals, just waiting for that timing to pick back up and waiting from a technical basis to see that timing pick back up as well. Whipsaw, so whipsaw with GrowGeneration there, Mark. There has been a lot of whipsawing and consolidation. That comes with consolidation. It is what it is. But at the same time, there's a very clear pattern that we notice. And so we just want to keep an eye on it and be prepared. If we go down to, let's say, 3 months, we can see that even closer. Just be prepared. Keep it on your radar. It's a stock that's been sold off recently. So you're buying it at a bargain. Just wait for that breakout to occur. And, that's the opportunity to jump back in. If you missed that last rally from last year, preparing yourself for a new rally to come could help you jump on board early and make sure that you don't miss out the second time around. Exactly. There we go, Mark. All right. So we've got that one, GrowGeneration. We move on to the next one, IIPR. Once again, good long-term potential, about average risk, a little bit better than average. But the timing, once again, is still not there at 0.82, which is no surprise. As we've just talked about, these stocks have been sold off over the last couple of months. And that's why we're looking for some hidden gems, something that, nobody's really talking about quite yet. You start noticing some of the headlines if you follow the news through, Market Watch or Yahoo Finance or investing.com, wherever you get your news source from. You'll start to notice that there has been a pickup recently in the last week or so of more articles coming out about the marijuana stocks that, the big money or institutions or analysts are finally starting to get on board with these stocks, but it's not main headlines quite yet. And that's what we're trying to do here is we're finding stocks that are flying under the radar that have that potential for a breakout so you guys can jump on board with them early instead of waiting for the main news to finally pick up on these kind of stocks and miss out on some potential opportunity there. So we have IIPR. Taking a look quickly at the graph, once again, same type of situation. Lower highs but higher lows. Not the greatest looking wedge from a technical standpoint, but the consolidation pattern is still there. Well, let's go take a look at the next stock. Pln Hf Planet 13 Holdings. Good long-term potential, but this one does have a little bit more risk associated with it. Timing, though, is a little bit better than what we've seen with some of the other ones. At 0.98, it's basically just, moving sideways right now. So this is one we can keep an eye on. If we jump into the graph, we see the RT really just consolidating around that level of 1, which would show the stock is moving sideways. And looking at the pattern, similar to what we've seen with the last last couple so far. Lower highs, but higher lows. All of these stocks, it's very interesting that all of these stocks are consolidating currently and, really just kind of drive that home. That they could be ready for a breakout very soon, but we got to be patient. This isn't stating you should go buy these right now. This isn't financial advice saying, hey, buy it at XYZ or buy it at price, $335, whatever. This is just trying to give you guys an early insight, a heads up onto some of the trends that we're noticing here that have been really, really hot for 2020. Everybody's expecting them to really continue that rally into 2021. We've seen a little bit of a sell-off, but more consolidation, waiting for some bigger news, more from the legalization standpoint, to come out and, really get these stocks going again. But notice there hasn't been any headlines so far, main headlines so far, but you're already noticing these stocks consolidating and showing very similar patterns. I am a firm believer that charts are like a big picture of a stock, and a picture is worth 1,000 words. Charts are also non-biased and tend to show signs that something is getting ready to happen before the headlines do. And that's why I like looking at the charts, is because they can help you get an idea of what's going on before you see the major headlines on TV talking about it and can allow you to get in early, beat the crowd in early, so that way you can capture more of that profit and more of that explosiveness that tends to happen once the main headlines start coming out. All right, and last one on this list. Oh, I guess I got to re-sign back in. Give me one moment here, folks. There we go. I don't know why I keep having every single week. It always does this for me. I don't know why. It never happens when I'm recording videos on it. Just only when we're live. All right, getting back into the premium watch list here. Going back down. The last one I want to take a look at, just because, out of all the marijuana stocks, this is my personal favorite, but Gtbif, Green Thumb Industries, once again, has good long-term potential, above average safety involved with this one. Timing, however, 0.91 tells us it is in a slight downtrend. It has sold off, just like we've seen with the major or the other big marijuana stock names out there. Overall, the stock's about average currently. But one thing to keep in mind, this stock does have an earnings report coming up on the 12th of May, I believe, if I'm not mistaken. And one thing that I like about this stock, the reason why I like this stock so much, if we go and put earnings per share on the graph and take a quick look at it, go to a one year, look at that earnings pattern. A nice steady rise from bottom left to upper right, like a stair-step pattern. This is exactly what you want to look for. So not only is it in, a industry that has a huge potential to really thrive, but it also has a really solid balance sheet, good fundamentals, and that earnings pattern that you see here isn't necessarily stating that this is what their earnings are right now, but this is looking at also a forecasted 12 months down the road earnings per share based off some major analyst insight there. And you can expect that if you see that number increasing, that tells us they're making money now, and the big money is expecting them to continue to make money or more money down the road, 12 months down the road to be exact. So seeing that, the stocks had a pullback. You have a really beautiful looking EPS line there. All we got to do is just be patient. You see it kind of consolidating over the last few months here. I'll just zoom in. You see this sideways move from about the March 30th until now. And we're finally starting to break out of that sideways movement, giving us some early insight that, hey, something may be changing. We're finally starting to see it crossing back above that 40-day simple moving average, which we've talked about plenty of times in the last few weeks. And going back to it, the 40-day moving average has been a pretty good time to jump on board. Here, it was trading at, what was that? Closed at 1460. So let's just call that $15 even. You had a really nice, let me get back into it. There we go. So you had 1460, just call that $15. A really nice run. It came back, retested that 40-day moving average right around the end of January, and then continued to run and got you out. Where is that? Let's go that day here. Closed at 32. So basically 100% gain in a matter of a few months. Then it started getting more volatility, as we've talked about in the past, some early signs that something is changing. You see bigger swings here, cross below that 40-day moving average again. And now finally, for the first time in about a month or so, starting to get back on track, trying to regain some ground, maybe head higher here. Now, not saying it is going to head higher right now, but just seeing some early potential with some of these stocks out of the marijuana industry, and with them sold off over the last couple of months, could be a good time to keep these on your radar so you can buy that dip and take advantage of it if you start to notice those breakouts here. All right, so there's the marijuana industry that we've been looking at, the marijuana watch list that we built on the 21st of January. If we go down here, let's take a look at clean energy. This was a major player in 2020. Everybody is expecting a major move come 2021. Well, 2021 has a lot of time left, and we're just finally starting to see, some of the announcements of new plans to the infrastructure plans to help rebuild the economy, rebuild the country, and make it more of a clean energy or green energy or green technology kind of transformation going forward. So that's why everybody jumped into these stocks originally. Well, they've sold off. People have taken their profits. Nothing about the original thesis has changed. The only thing that's changed is these stocks that were great potential avenues to take advantage of this whole infrastructure bill are the fact that they're just lower. So you're getting a better deal for them if you missed out on that first time, or, if you sold out, took your profit early on when we started noticing them, losing traction, and you're waiting for a good time to get back into them or re-enter the position. Well, these are ones you want to keep on your radar and take a look at. Let's go ahead, look at Vestas Wind. First and foremost, over a 1 year time frame, you notice one of the things with the price pattern, it is pretty choppy. It gaps up, gaps down. Earnings look phenomenal. You see a huge spike in earnings just recently, which is definitely a good sign, showing that analysts are expecting to see a big jump coming in the next 12 months. So one to keep on our radar here. You can notice when it broke out of that 40-day moving average, it came back, retested it, and then bounced back higher, trying to move higher. Personally, in my opinion, I don't like seeing the big moves between candle to candle on a daily basis. I would probably pass on this just because that typically shows the liquidity issue. But, still a good stock. It's one of the only in the clean energy that's still rated to buy right now, or just became a buy. REGI, this is a big name. A lot of people ask for this stock at the end when we analyze your own stocks. And REGI looks good. The earnings are still rising. Yeah, they had a little bit of a dip recently around into February coming into March. But overall, this has a lot of potential. The only thing, once again, that's changed with this is the fact that these stocks have sold off. People took profits. That happens. Doesn't mean it's the stock. The stock is a bad stock. Doesn't mean it can't come back. It just means now's not the time to be into it, but that's why we're looking at them now, getting your shopping list ready, getting you guys prepared for if we see some reversals and we see these stocks come back to life, because these companies are going to be needed for that infrastructure change. So we go to the next one, AM. This one is a unique one. Even with the sell-off in clean energy, we've seen a nice steady rise from bottom left to upper right. It's really been maintaining its own when the rest of the field has been selling off. It's been moving sideways. And when the industry as a whole is moving down and you're just churning water moving sideways, that shows a lot of strength of the company. Now, earnings are pulling back a little bit over the last few months, or since the beginning of the year really, but overall they're still higher, or they're still moving higher on a longer term basis there. JK Solar, another big name in the clean energy space. Look at the earnings per share. Nice rise from bottom left to upper right. Earnings tends to be the engine that drives stock prices higher over time. So with earnings steadily rising, this sell-off here that we've noticed with JKS could create a good buying opportunity in the very near future. Also looking at it with that 40-day simple moving average. 40-day moving average has been a relatively good indicator to use over the last year, and we're getting close to potentially breaking back above that 40-day moving average, which could be a good early entry point for you guys that want to jump into the clean energy space. AMRC, big sell-off. This one has a little bit different of an approach. This one has those low or higher lows that we've noticed with some of the marijuana stocks after the sell-off. The earnings still look really, really solid. Honestly, this reminds me of the sell-off we noticed with the overall market a year ago back in March when we had the COVID crash, essentially, where you had that sharp crash immediately and then a little bit of volatility where you start to notice some price direction potentially changing, some investor sentiment starting to change, and now all of a sudden you're hitting higher highs and higher lows at a better price opportunity there. Mark's asking about EMPH. I think EMPH is in this list, if I'm not mistaken. This one is not in the list. That's why. That was in, EMPH was in our stocking stuffers. We'll take a look at that one here in a second for you, Mark. All right. And last but not least, the last one out of this list that I want to take a look at, Extro. As you guys know, I talk about this stock every single week. Somebody always asks me about it, whether it be Jay or one of you guys out there. One of you guys always asks about Extro. And look at that, folks. We talked about this. I talk about it week in and week out. I like this stock personally. It had a blatant sell-off because of some false report that got written by, looks like, a high schooler. Stock dropped all the way to 2, and since that point, it's almost it's 100, what is that, 150% or 75% up so far. That's not a bad return after the sell-off. If you've been following it, that was a good dip opportunity to jump on board. They have a lot of good news coming out. They're looking to potentially start actually putting some production product out there this year itself. So that's really the main thing I want to see with Extro, is that they start actually producing, start manufacturing, so that way they can start to gain some money rather than just spending money right now. Hit your line of stand on the stock. You guys, okay, never mind. So yeah, I like the stock. I like what we're seeing. Higher lows starting to pick up off of that sharp sell-off that was done by some high school students. Homework report basically, or class report. But yeah, I like what we're seeing with that. So you're noticing some of these stocks out of the clean energy also starting to gain traction, starting to slowly move higher. They haven't really hit that breakout yet. They haven't had that news or that headline that really, gets people focused in on them now. So therefore, they're flying under the radar, and definitely something you should be keeping keeping on your shopping list there to follow them there. Why no EPS info on that one? Because it's a foreign stock and they haven't been traded on a major exchange until just recently, and their EPS data hasn't been available because of the changes that they've gone through over the last year. All right, and now getting back into it, let's see. Let's go find one more list that you guys should be keeping an eye on here. Crypto stocks, we can take a look at that. Crypto stocks have been getting hit pretty hard ever since, Bitcoin started coming down a little bit. You started seeing some, what looks more like manipulation in the crypto markets, more so than, a natural sell-off where overnight you have a 20% drop in some of these cryptos all across the board, all at the same time. It's definitely concerning seeing that there. But crypto is here to stay, no matter whether you like it or not. Crypto has become mainstream now, and crypto stocks are going to benefit from that. And some of these stocks may be selling off right now, maybe a little early to consider some of these quite yet. Whereas the marijuana stocks, the clean energy stocks, those have all sold off a couple of months ago, had some time to really consolidate, and now starting to look for that reversal. These are still possibly in that, so you may want to be a little careful with the crypto currently. And then last but not least, where is it? This premium. Is it not in here? That's right. It's not in here because we built it ourselves. Let's go find, did I take it out? I thought I had it in here still. I must have taken that out. Maybe I deleted it because I needed space there. Let me just double check one last time here. 2021, top safest stocks. Stock pick ideas. Oh man, I guess I may have had to delete it to make room for other ones there. Is it in here? Nope. Well, there goes that idea for that one. Let's go back. Make sure there's no other place I would have put it. Work from home stocks, top VST. Huh. Well, folks, I do apologize for that. I guess I have actually deleted it to make room for one of the other watch lists that we've used. So I do apologize for that one. It will pick up again too. But yeah, Crypto 2021 was in your watch list. Yeah, Crypto 2021 was definitely in the watch list here. Those were ones that you guys liked that we were creating just for you guys, and those have actually been added into the premium watch list for you guys, like we've seen here. But those are the three that we've added so far. Let me know if you guys, you guys seem to really enjoy these a lot. These custom built watch lists, analyzing the market and bringing some ideas that weren't necessarily the main talked about ones, but that have been very profitable since we've been talking about them here. So if you guys have other areas of the market, such as clean energy, or if you guys want to take a look at like banks, for example, or energy stocks, or excuse me, tech stocks. If you guys have different areas that you want to see analyzed in this way, let me know in the comments of today's video as well. So that way we can potentially do them for upcoming live streams that we have planned for you guys. Also, if you guys haven't already, I see we've got about 25 likes and we have about 130, 140 people in here already. Let's see you guys all hit those hit that like button, hit that share button, help me out, which helps you guys out and continues to grow this awesome community that we've built here over the last few years. What happened to the Russell Head and Shoulders? We can take a look at that. I've had a few people ask me about that. For anybody that's not familiar, if you're just tuning in for the first time, I do a lot of content over on our YouTube channel as well. And it's one of the videos that I brought to light there, talking about the potential head and shoulders pattern we were noticing with the Russell. So if we go just tap on the little magnifying glass, we'll use IWM as the Russell. And then zooming in, let's go 3 months. All right, so we still are at that neckline here. Let's just zoom in so you guys can see it better. There we go. So here's the shoulder, the left shoulder. Here's your head. Here's your right shoulder. It's interesting. We hit that that shoulder line at 230 roughly as of today, and now pulling back off of that. The neckline itself comes in about 210 down here at the bottom. And so we still haven't broken that neckline. And as I stated in the video, if you break that shoulder line at around 230, that is a bullish sign showing that you're breaking out to the upside. If you break down below that 210, 209 level, I believe it was 209.40 if I'm not mistaken, that breakdown below the neckline, that is the bearish signal that tells us that we're in for a correction here. So right now, we pulled back a little bit from where we were seeing it, but overall, we're still in that head and shoulders pattern. We still haven't really seen a breakout one way or the other, and just shows consolidation. It's not going to happen overnight. This is on a weekly or daily chart. We're looking at a 3-month time frame, so it's not going to be a single overnight phenomenon that just happens. It's something you need to be aware of over the next week, 2 weeks, 3 weeks. It could take some time to develop, but don't take your eyes off it, because once you take your eyes off it, that's going to be the time that you wish you'd paid closer attention to it, and you're going to miss out on an opportunity there. So definitely something to go check out. If you haven't already, head over to our YouTube channel. You can take a look at it. I believe it's the one chart you need to see right now. So yeah, go check that out if you haven't already. All right, and now with that, let's go ahead and start to take in requests of stocks that you guys want to see. Let me know what stocks you guys want to analyze in the comments below, and we'll go ahead and start to analyze them for you here. Also, Mario saying telecom. That's actually an industry I haven't even thought of, but that could be a very interesting one. So appreciate that, Mario. All right, so let's go ahead and get this back to the main screen. Go back and back and back. Tap on that magnifying glass, and let's see. AQN coming in as our first stock of the day. So AQN, we have we'll take our time with this one, work our way from left to right with the 4 indicators, go into a little bit more detail for everybody who's just tuning in or brand new. So RV is looking at the long-term potential over the next 1 to 3 years. So above 1 tells us it has good long-term potential, below 1, poor long-term potential. At 0.95, that tells us it has poor long-term potential over the next 1 to 3 years. Then you get the RS, or the relative safety. This is really looking at the balance sheet, the financials, and the longevity of their earnings reports. The more consistent that they're able to beat their earnings quarter over quarter, year over year, the higher the RS is going to be, which indicates lower or higher or lower risk. Essentially, it's a risk indicator. So at 0.91, that's below 1, tells us it does have a little bit more risk associated with it. But then we look at the timing at 1.05. Short-term price trend indicator at 1.05 tells us it is in a slight uptrend, but in a very soft uptrend right now. Typically, we want to see that RT hit 1.1 or greater. Therefore, overall, looking at the VST, which is a combination of all three of those prior indicators, at 0.98 tells us it is slightly unfavorable compared to the average stock out there. All right. So now that we've all gotten a good understanding of what the indicators are telling us, let's see how fast we can make this happen. All right. So we go to the next one. What's the next one? Mbis. Looking at meme stocks. I like it. I like it here. All right. So Mbis, poor long-term potential, a lot of risk associated with it. Even with the 11% down day today, it's still slightly up on a short-term basis. Overall, the stock is not favorable, though. On a stock that has an RV and an RS below 1, you really need to see that timing at, 1.4, 1.5 or greater. At 1.1 on a risky stock like this, not worth it. But we all know that's where that comes from, so just keep that in mind as well. SNDL, poor long-term potential, a lot of risk associated with it. It's in a steady free fall, therefore it's not favorable right now. NVAX. There we go. So NVAX has great long-term potential, about average risk associated with it. It is in a slight uptrend. Short overall, it's favorable. Once again, though, we prefer to see that RT at 1.1 or greater. Generac, GNRC. If anybody's been part of the Jockey Club, I know I'd probably mention it at least once or twice a week. Generac is one that I got into a year or two ago in the Jockey Club. We got into it around 86 or 80, somewhere in the 80 range. Man, look at it now. $333. That is a phenomenal run here with Generac. I like the stock. It has great long-term potential. It has less risk associated with it. It's in a slight uptrend right now. Overall, this stock is definitely favorable. This has been a phenomenal performer over the last few years. Oh, whoops. LAD. There we go. LAD, good long-term potential. Solid fundamentals with this stock. Timing, it is in an uptrend. Need to be careful of that. Let's change our graph settings here once again. Go to the RT. Go back. Which way is that RT heading? So it's at 1.11 on the RT, but that RT is heading in the wrong direction. If it was coming from below 1 to above 1 and going to that 1.11, that would be a good thing. Seeing this decline is definitely not a good thing. You're noticing the stock's momentum shifting here essentially, but at the same time, you do notice the lower highs over the last 3 months, but also the higher lows since about the 25th of March till now. You also have higher lows, so consolidation. So this is one, when you see these kind of signs appearing, tells us we need to be cautious with it. We need to be more careful with it, and just keep a closer eye on it going forward until we see a breakout one way or the other. That would, tell us to react or do something with it. All right, F for Ford. Whew. So Ford, poor long-term potential. A little bit more risk than the average stock out there. It's steadily declining. Overall, this stock is not favorable. ORI. ORI, good long-term potential, less risk associated with this stock. You have a really nice, strong uptrend. Overall, the stock is definitely favorable. I like seeing that one. It's one that I haven't looked at before, so appreciate you bringing that to the live stream today so we could take a look at it. ANF, poor long-term potential, does have a little bit more risk than the average stock out there. Great long-term potential, great timing though. 1.63, really, really strong short-term uptrend. Overall, the stock's favorable right now because of that timing and that timing alone. LLIT, poor long-term potential, a lot of risk associated with it. However, you are in a strong short-term uptrend. You've seen some big spikes. It's a volatile stock. It's a speculative stock. Has some big pops and drops, but on a short-term basis, overall, it is in a strong uptrend. Therefore, the stock's about average, slightly favorable right now. SNBR. SNBR, great long-term potential, less risk associated with this stock. However, the timing is not there. At 0.79, it is in a steady decline. Therefore, the stock is not on a timing basis, the stock is not favorable. On a fundamental basis, the stock is still a good stock. Just wait for that timing to pick back up to get a better buying opportunity on a fundamentally sound stock. All right, SEM. SEM, good long-term potential, less risk associated with this stock. You have a really strong short-term uptrend. Overall, the stock is definitely favorable. It's nice seeing some stocks that we typically don't get requested on a weekly basis coming in here today. So I don't know if that's because new people are joining in or you guys have found some new stocks that you've gotten rid of and want to take a look at, but I like seeing some of these new names coming in here. That's the great thing about doing the analysis at the end is that anybody following along can get some good ideas, get some analysis, and it helps the group learn about other potential candidates. And that's really what we're about. We're about learning about how to trade, finding good opportunities, and knowing when to trade them to help everybody, every single week in and week out, become financially independent and help turn the markets in your favor to generate income for yourself. All right, so this one is going to be an ETF. And as always with an ETF, the primary and only focus is on RT. At 1.02, it is in a slight uptrend, pretty flat overall though. Therefore, it's about average. I wouldn't really call that favorable quite yet. Tesla, TSLA. So Tesla has great long-term potential, solid fundamentals, timing. This is a stock, I like Tesla. It's having a hard time getting momentum again after some big runs. It's a good stock, but even after a phenomenal earnings report, still drops. Seems like short sellers are having a field day with this one, trying to keep it low, but eventually those shorts will cover and Tesla will be right back to where everybody expects it to be. Long term, I like Tesla, but on a short term, as we can see with RT, not the time to be long in it. See HZO. HZO, great long-term potential, less risk associated with this stock. You have a really steady uptrend, so overall the stock's definitely favorable. GBTC, not finding that one here. And as always, if there is a stock that's not traded or that VectorVest doesn't have tracked currently, you can always send an email to angieh@vectorvest.com. You can find it in the software itself. And you can request that symbol to be added. It's interesting. You're the second person. I've never heard of GBTC until today, and you're now the second person today alone that's talked about that stock. So I may need to look into that one. Kodak. Let's go. There we go. KOD. Wait. Eastman. Kodak. KODK most likely is the one you're referring to. So, unless I'm wrong, tell me, you can let me know, Antonio. But this one, poor long-term potential, a lot of risk associated with it, steady free fall, overall not favorable here. Gilead, GILD. And why I'm going through these, as always, if you're not already on the mobile app, if you're not already with VectorVest, click on the link in the description of the video, and you can sign up for a 2-week free trial. You can do all of this on your own, wherever you're at any time on the go. So looking at Gilead, poor long-term potential. It does have a lot of risk associated with it. It's in a steady decline. Therefore, the stock is not favorable. CAL, poor long-term potential. Does have some additional risk associated with it. However, you've had some really strong momentum on a short-term basis recently to the upside, making the stock favorable for you speculative traders out there. Spot, SPOT. So Spot, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Therefore, the stock is not favorable currently. MDC. Great long-term potential, less risk associated with this stock. You have a nice strong uptrend. Therefore, the stock's favorable right now. LGO. And we'll do two more after this one. So LGO, poor long-term potential, a lot of risk associated with it. However, you do have a really strong short-term uptrend. Therefore, for you speculative traders out there, this is a favorable play right now. And then let's see, CALX. Good long-term potential, less risk associated with it. However, the timing, 1.05, a little bit disappointed with that, to be completely honest. I want to see that at 1.1 or greater. 1.05, you're keeping a close eye on it. Maybe not making any changes currently if you're already holding it, but definitely watching it very closely here. Then last but not least, hey, there's Jay coming in. We had one apps. So APPS, let's go take a look. Apps has great long-term potential, has solid fundamentals, so less risk associated with it. However, even the best stocks can have pullbacks sometimes, and that's what's happening right now. 0.79 on the RT tells us it is in a steady decline currently. Stock is favorable, but not the time to be into it. Somebody was talking about a line in the sand on apps. If you recall, when I got that, or when I said a line of sand, personally I don't have apps, so I don't recall any line in the sand that I've talked about. Doesn't mean I haven't, just doesn't come to mind. But with this one, realistically, I see support right around 70 a share. You've hit it once, bounced off, broke down, quickly came back above, found support once again for a third time, fourth time. Looks like it's trying to go back down for a fifth time to retest. That 70 line is definitely holding, but if it breaks that 70, that is a very strong support floor. If it breaks 70, that would be, a clear warning sign to be very, very careful. So that is what we see with those. All right, so let's go back, look at the market review. So right now we're still one tick into the green, or excuse me, 3 ticks into the yellow. The market is neutral, and VectorVest advocates caution when buying stocks at this time. If we scroll down, take a look at the color guard. Price is still yellow, still pretty much flat from where we saw it. RT is pretty much flat. Buy to sell ratio, if I recall, has picked up a little bit. Same with the MTI, it's actually increased 0.01. So we have seen a little bit of an uptick with the MTI and the BSR, but price and RT pretty much stayed flat. Looking at the advanced declines pulled back a little bit, but not by much. Still pretty much right at 50%. Advances have upticked a little bit now to 41%. So realistically, no changes there either. We scroll down, take a look at the major indices. The Dow basically flat. NASDAQ pulling back a little bit more. Now down 0.1%. S&P pulling back a little bit. Pretty flat though. Still about 0.2%. Overall VectorVest composite, same place it was when we first started today's session. So not a whole lot of activity. Market's been relatively calm. Most likely investors are just, taking in the data from the Fed and, analyzing it to try to get any insight they can on what the Fed does, what the Fed is thinking, and what their thoughts are on how the market is handling itself. So yeah, that's the market review for the day. So with that, I hope you all have had a great time here. Thank you all for tuning in. Once again, if you haven't already hit that like button, hit that share button, do so now. Help us continue to grow this awesome community where we help each other learn how to become successful by trading in the markets, mainly utilizing the stock advisory app. So with that, take care. Have a great rest of your trading day. Be safe out there. And make sure to tune in next week at 11 a.m. Eastern as we kick off another live stream here on Facebook Live. Also, one last reminder, if you guys ever want to watch the replays of these, they will be posted on our YouTube channel, typically at 6 o'clock the day of the live stream. Maybe some changes here or there periodically to, if there's a new video that we're going to be putting out at 6. But for the most part, it's going to be coming out right around 6 o'clock, every Thursday night there. So if you haven't checked those out, make sure to go do so. You can watch the replays there as well. So on that, take care. Adios. See you guys in the next one.